Bloomberg World Headquarters in New York to our audiences worldwide. I'm David Weston. Welcome to Balance of Power. This is where the world of politics meets the world of business. On the brief today, we start off with the markets, of course, with Abigail Doolittle right here in New York and Alex Steele on the oil crash. Kevin Cirilli will join us from Washington on the Trump administration preparing a possible response to all this. So, Abigail, we have to start with the markets, given what's going on. It's bad.
It's bad. It feels like capitulation. We're just having tremendous selling across all risk assets. This, of course, after an 11-year bull market for stocks. And the Fed last year, of course, doing that repo, that emergency 50 bip rate cut last week. But we've had this tremendous risk asset rally. There have been some pauses in it over the last 11 years, but basically straight up. And now with the fear around this coronavirus and what the impact could be on the global economy, investors, traders simply want out of stocks. They want out of oil. And of course, that bear market in oil, that crude crash, really pressuring stocks. And we've talked about that before. That divide between commodities and stocks was very worrisome for some time. Now we're seeing it in spades.
Abigail, you mentioned capitulation. I think a lot of investors right now are trying to figure out capitulation. When does it come? How do we know?
You feel it, the fear, the panic and the fear, and also just the fact that it's not just stocks and oil that are selling off. High yield is selling off. Credit is selling off. Investors are simply getting out of risk assets. We're seeing the haven bid. The other thing that you would want, though, with capitulation is that bottom. You always hear about the capitulation bottom. Technically, though, we're nowhere near close to the bottom. So we could see, in fact, days and weeks of this kind of relentless selling, very reminiscent of 2008. Take a look at the energy sector. It's incredible, down more than 15%. Its worst day ever going all the way back. That's the degree of the fear, the uncertainty, and the selling that's going on
given
today.
The price of oil, which we'll get to in just a moment now. But give me an example. You're a technical person. Give me an example of resistance on the S&P. What are we looking for?
Well, we're looking more at support, which means we want to see where the buyers are going to step up. So on a weekly basis, because we've blown through that 200-day moving average on the S&P 500. You want to go to a weekly chart. On today's open, we were well through the 100-week moving average, which means we'll probably find support down on the 200-week moving average. If we're lucky, that is at 2640. But I can easily make the case that the S&P 500 is confirmed for 2300. Wow. That would match the degree of selling we're seeing. That would match the degree of the buying that we're seeing in bonds. When you have bonds rallying in this way, it's hard for stock folks, even if you didn't have this degree of uncertainty, to want to get into stocks because they're listening to the bonds. Why are folks buying bonds so heavily?
So as far as we can tell, and we can't tell, as far as you know, we may have a ways to go.
Yeah, we probably do have a ways to go. It might not be straight down, but this sort of relentless selling across asset class suggests more downside to come. Okay,
Abigail Doolittle, thank you so much for joining us. And now let's get to that oil subject that Abigail raised. Joining us now is my colleague, Alex Steele. Thanks so much for being with us. So, my goodness, Russia versus Saudi Arabia. What happened?
Yeah, so it got pretty ugly, and that's going to have big ramifications on the U.S. shale industry, and be very interesting politically how then President Trump responds. So there is a narrative that Saudi Arabia went super hard and sort of backed Russia into a corner, and Russia didn't like that. On the other hand, no one likes U.S. shale except for U.S. shale, and Russia is also dealing with their trading arm of Rosneft being sanctioned by the U.S., as well as a lot of pressure on Nord Stream 2, which is their gas pipeline out of Russia into Europe that the U.S. doesn't like either. So you could also make an argument they're kind of waiting for a moment to strike, and this is now that moment.
Do we have any sense of how bad it is out there, particularly for shale producers?
It's definitely going to be bad. I've been speaking with oilfield services and integrateds as well as E&Ps all night, and the rhetoric is that it's bad. They're retrenching. They're all cutting their CapEx. Two officially have come out today and said they're cutting their CapEx. Parsley and Diamondback, they're small E&Ps within the Permian. The problem is the private players. A large portion of the U.S. output comes from the private players. They're just going to get wiped out. You also have to look at the hedges, who's actually hedged and what and when they wind up winning and losing money. That's key. Occidental, they're hedged, but they're hedged for not necessarily this kind of price fall, and that's going to wind up hurting them.
So if, in fact, that there's a danger of some of the shale guys not making it, can the big guys come in and pick up pieces?
It's dicey. Like a Conoco and a Chevron are going to be okay. They can probably deal with their dividend and their cash flow at about $50 or $54. But the likes of Exxon, they're not free cash flow positive yet. They're committed to their CapEx program, as I said last week, and their dividend coverage needs $79 Brent.
Wow.
That's not going to happen anytime soon. So for those guys, it's going to be hard.
What's this doing to the budgets of Saudi Arabia or Russia, for example?
It's going to be really bad. Russia's not going to like it, but their fiscal break-even's a lot lower than, say, Saudi Arabia. Now, the actual break-even to get oil out of the ground is like dollars in Saudi Arabia. It's much higher here in the U.S., but it's that fiscal break-even of 80 plus is going to kill them.
Okay, a lot of pressure out there in the oil industry. Thanks so much to Alex Steele for joining us on that subject. And now we go to Washington, and our chief Washington correspondent, Kevin Cirilli. He's at the White House. And Kevin, I must say, we just had a headline cross that says that President Trump is going to hold a meeting on coronavirus economic response today, Monday. We've been hearing hearing that something's going to come out of the White House. Do we know when and what it's likely to be?
Well, President Trump will arrive here at the White House at about 4 o'clock New York time. And upon his landing, he's going to head immediately, we're told, into an economic briefing as it results to the coronavirus. Surrounding him, David, there's been quite a lot of pressure for him to deliver some type of economic response to the coronavirus. At 5:30 New York time, there's going to be a briefing. No word yet on whether or not we'll have some type of readout or communique following the economic portion of this private meeting at the public portion at about 5:30 New York time. But up on Capitol Hill, lawmakers now openly discussing issues pertaining to regulatory forbearance. They're also talking about the potential for there being some tax relief. We're right around the corner from tax season. And lawmakers really caught flat-footed as it relates in both parties to getting some type of economic agenda across the finish line as it relates to the coronavirus. But now the general feel here in Washington is that they've awoken to the reality and the economic pressures. And there's been, I'm told, several meetings up on Capitol Hill as well relating to this.
Certainly the tone seemed to be changing at the White House in particular, where at the beginning President Trump said, don't worry, we have this under control. It seems to be that he's really stepping up more now. Let's ask about who has the power here. Can the president, by executive order, take care of what he needs to take care of, or does he need the Congress? Because as I understand it, they're in session this week, but they're out next.
Precisely. He might need Congress's help. And talking to sources up on Capitol Hill, they've noted that regulators typically in other economic crises are able to put out some guidance without needing congressional approval. The Treasury Department also, of course, has powers that they might utilize, as do the different agencies. But there might be a congressional component to this. We just don't know which way. If they want to go the tax route, for example, yes, they would need certainly the congressional route. But we just don't know at this time.
Let's be very specific about sick pay, because that's one of the things that seems to be on the table for people who maybe have it or have been exposed to coronavirus, and they may not have the benefit of an employer who can cover their sick pay. Is that something that the White House can do, or do they need the Congress for that? Do you know?
They would need Congress. And that's, I think, where the broader scope here gets to be a bit more interesting. And again, just with the $8.3 billion package last time, even in that same breath, the president putting pressure on the Federal Reserve. So there's this tension that has emerged between Congress and, of course, between monetary and fiscal policy as well. But hopefully we'll have some more clarity coming from Washington within the next 24 hours.
Yeah, it sounds like we may actually hear something later today when the president gets back to the White House. Thank you so much to Kevin Cirilli reporting from that White House. And now it's time to find out about what's going on with First Word News. With that, we turn to Ritika Gupta. She's here with that First Word News.
Thanks, David. Medical teams will board a cruise ship off California today. There are at least 20 cases of coronavirus on board, and more than 3,000 passengers and crew will be put into quarantine when the ship docks in Oakland. Italy has reported a surge in deaths from the virus. At least 366 people have died there. That's more than in South Korea. The Trump administration is drafting economic measures to combat the fallout from the coronavirus. Bloomberg's learned that one of the provisions could be a temporary expansion of paid sick leave. There could also be help for companies facing disruption. The package hasn't been presented to President Trump yet. Both Joe Biden and Bernie Sanders have high hopes into tomorrow's Democratic presidential primary in Michigan. A Biden win could bring him an unsurmountable lead in delegates by mid-March, with a clear path to the nomination. A Sanders victory in Michigan would help bridge the gap in delegates Joe Biden opened up on Super Tuesday. But even if Sanders loses in Michigan, he says he doesn't plan to drop out of the race. Iran is still allowing international inspectors access to its nuclear sites. Iran had said it was no longer bound by any restrictions of a landmark 2015 deal, but the UN's atomic watchdog agency says it is cooperating. In recent months, Iran has violated all main provisions of the pact and increased its stockpiles of enriched uranium and heavy water past its limits. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David?
Thanks so much, Ritika. Coming up, we talk with a Stanford professor of medicine about the progress of the coronavirus and what can be done about it. Plus, of course, we will be keeping an eye on the markets throughout the program. U.S. stocks are down more than 6% at present. Live from New York, this is Bloomberg. This is Balance of Power. I'm David Weston. Governments and markets are trying to come to terms with the coronavirus, but they need to know what they're dealing with first. And to address that question, we welcome now Dr. Jay Bhattacharya. He is professor of medicine and senior fellow at the Stanford Institute of Economic Policy Research. He comes to us today from Palo Alto. So welcome, doctor. It's really great to have you here. Give us a sense, what can we know, or at least project, about where we are in the progress of this disease, given what we saw in Wuhan province?
Yeah, so the data that are coming in from China, from Korea, are really interesting. There's been a lot of panic and a lot of focus on very, very high mortality numbers. But the thing to remember about those numbers is that they're measuring people that show up at the hospital or already have severe conditions. Just like almost any cold or flu, there's a range of reactions. Some people get very, very mild sickness, and some people have a much more severe illness. We're not measuring the people with a mild illness, and so the mortality numbers people suspect are likely to be lower than being reported. So, for instance, in Korea, South Korea, where they've measured a much larger population of people, the mortality rate looks like a very, very bad case of the flu, as opposed to mortality rates in the 2s or 3s, which would be much, much worse, 20 times worse than the flu.
So
the times worse than the flu.
Mortality rate is lower, but in part because it sounds like probably more people have it in the United States than we realize about. What about the testing process? Is it realistic to expect us to test millions of people across the United States?
Yeah, the test right now, what they have is basically an RNA test, which is, if you have the virus and you have the condition, you can test and you can see that you have it. But once you're cured, once you've cleared the virus, you no longer test positive. So we don't have a test yet to see, but at least widely available test to see whether you have had the virus and recovered from it directly. That you test by seeing that you have it, and then later you test again, you don't have the virus. Then we infer that you've recovered. But we don't have a test to say, okay, you have antibodies. So it's a little hard to answer that question. And actually, this is a theme I want to bring up. It's really uncertain right now. There's many, many, many variables still yet to be cleared up. We don't know really the death rate. We don't know fully the recovery rate. And I think this is partly why you're seeing essentially a worldwide panic in response to this. It's not just how severe the condition is, which I think is probably less severe than we're seeing, but the uncertainty around that. And that's, I think, leading to a lot of the economic effects that we're seeing with the virus.
So, Doctor, where does panic leave off and properly aggressive response pick up? Because it looked, at least like in Wuhan province, that part of the reason why it appears to be leveling off there is they really put something like 50 million people in quarantine. Right now we have northern Italy with something like 17 million people in quarantine. I don't know if that's a panic or whether that's really the best way to address deterring at least the spread of this disease.
Yeah, no, that's an excellent question and an excellent point. I mean, I think a quarantine is a reasonable response in cases where you have a condition that's spreading rapidly. We don't have very good data about it, and basically quarantine is, in some sense, it's a public health response of last resort. When the virus was found in Wuhan, the authorities really didn't know much about it, and so a widespread quarantine seemed like the appropriate thing. Of course, it seems like it was too late. Given now what we've seen about the infectivity of the condition, I think the way to think about the quarantine is as a way to slow down the rate at which people get it. I don't think will prevent a very large number of people getting it. Essentially, it's infective enough that it's very likely that people will be exposed at some point or another. Now, the thing you don't want to do is overwhelm the healthcare system that are caring for the people that are affected very, very severely. So in Wuhan, that was a major problem. If you remember the story about opening a hospital in 10 days, that was because the healthcare system was so overwhelmed by the virus. So I think the quarantine serves a really, really important purpose in places where it's spreading and there's a lot of uncertainty about what's going to happen. So in a sense, you're absolutely right. The panic serves a purpose. It serves a medical purpose. But it has enormous economic consequences, disrupting people's daily lives for, like at this point in China, for months. So it comes at a pretty severe cost. So the question is, what are the costs and the benefits? The benefits are that we can the healthcare system doesn't get overwhelmed. People who get a severe version of the condition can get treated and hopefully appropriately treated. And on the cost side, you have millions of people not going to work, not going to school, not doing their daily activities, stuck at home, and that itself also has its costs, right? So people who are vulnerable, that depend on home visits, for instance, they're going to have a hard time getting the things they need. So it's on net, I'd say it's not a good idea to panic. I think listening to the public health authorities, where they have the best information, that's appropriate. And so if the public health authority is telling you to quarantine or stay in place, makes sense. Is it the right decision? Unfortunately, you can only tell ex post.
Right. But at the same time, what do you make of the communication we're getting out of the government? We had Dr. Fauci yesterday on television say, for example, if you're an elderly person, particularly if you have any kind of compromise to your system at all, you're better off just not getting on a plane and certainly not getting on a cruise ship. Shouldn't we be acting preemptively with respect to more vulnerable parts of the population?
Yeah, no, I think he's absolutely right. So if you look at the mortality numbers out of China and Korea, it is the elderly, the people with pre-existing health conditions that suffer the condition at the highest rates of mortality. So they have the mortality above 10%. I mean, that would put me at home too. I would not want to be exposed to the virus if I was in a sort of vulnerable state. That's not everybody though. The vast part of the population is not in that vulnerable state. So the question is, how do you balance that? How do you protect our vulnerable population while maintaining our economic activity, maintaining our not just economic, but sort of other activities that make life worth living. So I think that's kind of where we are. How do we target a quarantine or a response so that we don't hurt the most vulnerable while still being able to continue to do what we want to do? And I think Fauci's response to this is completely reasonable. Don't go traveling, because you're going to expose yourself if you're vulnerable to large numbers of people, some of whom almost certainly have the virus or the condition. Don't go on very, very crowded places. So I think some activities shutting them down, like maybe shutting down very large gatherings or avoiding very large gatherings if you are vulnerable makes some sense.
Is the government giving us clear enough information? And for that matter, are the people in government, do they know enough to be able to give us clear judgment about what to do and what not to do at this point?
That's another excellent question. And as I said at the beginning, there's still quite a lot of uncertainty about the epidemiological effects of the virus. And because of that you have to, this I think explains why we're hearing sometimes conflicting messages, right? So the World Health Organization says 3.4% mortality. The South Korean numbers say something like on the order of 0.5% mortality. There's a vast difference between 0.5 and 3.4% in terms of what the right thing to do in response is. And so the conflicting message we're hearing is in response to those conflicting numbers and the uncertainty. But I think a consensus is starting to develop that it's probably on the lower side, like the South Korean numbers, as opposed to the higher side, the original 3.4% numbers, largely because there's an understanding that we don't have a testing program for a very large population of people who are mostly, they may have the condition, but they're not likely to end up in the hospital with it. We're testing people at the hospital to see if they have the condition, which is probably the right place to use the limited testing dollars we have. But we don't have a widespread test for a population that's not likely to suffer, from or die from the conditions. It'll be like a very bad cold or a flu, as opposed to something that's certain to kill you. Right. I think a targeted testing program where you focus on the vulnerable populations and a targeted program to sort of isolate people who are at the high risk of mortality, that makes the most sense to me based on the numbers I'm seeing.
Okay, Doctor, really appreciate it. That was terribly helpful. This is Dr. Jay Bhattacharya. He is professor of medicine at Stanford University. Still ahead, we'll have the latest on the plunge in U.S. markets. Energy, financials, and industrials are among the sectors that are hardest hit today. The S&P 500 Energy Index is down more than 17% on the day in the intraday trading. This is Bloomberg. This is Balance of Power. I'm David Weston. It's time now to get more on this sell-off going on. Joining us now is Kayla Lyons. So you can look at any part of the market you want. It basically says one thing: you don't want to risk today.
Yeah, I mean, there is literally red all across the screen that I'm looking at right now. Granted, we are off the lows of the session. We're no longer down 7% like we were at the open, which triggered that circuit breaker and 15-minute halt. But we're still down by around 5.5% across the three major averages. And really what you're seeing is there were already concerns in this market about the coronavirus, the potential implications for growth. Layer on top of that this oil price shock we're getting, and that creates much tighter financial conditions. And of course, it's a really dramatic move that we're seeing in oil. It's dropping the most since the Gulf War back in 1991. We're looking at WTI trading around $34 a barrel. I mean, this is very, very dramatic price action. We have to consider that this supply shock with Russia and Saudis going after each other, essentially after the OPEC plus talks collapsed last week, is happening simultaneously with a very significant demand shock because of the coronavirus.
Exactly, and I think Goldman said you get ready for $20 a barrel. That could come our way, right? I mean,
the street is telling you things could get a whole lot worse before they get better when it comes to oil. And of course, that's a huge issue for energy players. I'm looking at the IMAP function on my Bloomberg terminal. The energy sector is down by 17% today. You're seeing a lot of those E&P companies in particular. Many of them are down more than 40% because for many of these players, you need oil prices at $40, $50 a barrel just to break even. And obviously, we are well below that today.
And then well above the oil issue, you've got the banks who are really getting hit because everybody's expecting lower and lower rates.
Well, and we're seeing lower and lower rates. You have the 10-year Treasury down more than 20 basis points today, again off the lows, but we're still looking at around 0.5% just on the 10-year. But anywhere you look across the curve, we are sub 1%. So, of course, that becomes a big issue for profitability. And I was reading some work from Betsy Graysick over at Morgan Stanley today. She was saying it's not just about the low yields. The fact that you're seeing what we're seeing with the coronavirus, what we're seeing when it comes to an oil price shock, that creates higher probability of a recession, which of course is going to hit banks incredibly hard.
And at some point, it's not just liquidity, it's also solvency.
Exactly.
Particularly in things like the energy sector. Okay, thank you so much now to Kayla Lyons. Up next, Lonnie Chen of the Hoover Institution is here to give us his prescription for what we need in the public health response to coronavirus. This is Balance of Power on Bloomberg Television and on radio. From New York, this is Balance of Power. I'm David Weston. The United States may have the most advanced public health system in the world, but that doesn't mean it's up to dealing with what may be coming from us from the coronavirus. Welcome now an expert in public policy generally and specifically in health policy. Lonnie Chen is Hoover Institution Fellow and Stanford University Director of Domestic Policy Studies at Public Policy Studies. Lonnie Chen joins us now from Sunnyvale, California. So, Lonnie, welcome. Give us a sense of where we are with our public health system in this country and what we need to do in response to this virus.
Well, David, I think at this point, the challenge is that we're seeing certain parts of the country where the public health response has become elevated and more aggressive. So here in Northern California, for example, where we do have a cluster of cases in Washington state, in those areas you see public health agencies taking a more aggressive stand to mitigate the spread of the virus. So that's things like social distancing, canceling events, making sure that those who are at risk, the elderly, for example, understand that they need to take additional steps to protect themselves. Now, that is still more or less a regional phenomenon. The question is going to be if and when it begins to take hold more broadly and nationally. You're already seeing CDC, for example, and other federal agencies take a little bit more aggressive stand about things like cruises, telling elderly folks and folks with pre-existing health conditions not to go on cruises. I would expect more of that kind of response going forward. The goal here is to spread things out so that our hospitals and our public health system doesn't become strained like we saw in China with the initial outbreak in the Wuhan area.
Yeah, exactly. We actually heard from Dr. Fauci yesterday on the television saying basically to the elderly people with compromised systems, don't go on cruise ships no matter what. Also, you probably shouldn't get on airplanes. Good advice. But how do you strike the right balance? We just had a doctor from Stanford, a professor of medicine out there, say you have to draw this balance because for most people this is probably like a flu, maybe not even a very bad flu. There's a specific segment of the population that could really get sick and die as a practical matter. How do you draw the balance between that and what we're seeing right now in the economy and the markets? Because there's a lot of damage being done to the economy and the markets at the moment.
Yeah, and you know, David, it's a combination of many different factors because, first of all, there is a responsibility here to ensure that we are not spreading the virus to those who are susceptible to having some serious adverse health effects as a result. Now, it is the case that the majority of people are experiencing mild to moderate symptoms, but there is this challenge of how you draw the line there. And I think, for example, Stanford's a great example. So Stanford, which is the institution I spend a lot of time at, we've canceled all remaining classes for this quarter. We've gone online, rather, and we're thinking about mitigation strategies for the spring quarter because you've got a bunch of students now who are going out for spring break and potentially then coming back to campus several weeks from now. That kind of migration does tend to create challenges. So again, I think the issue is you're absolutely right. On the one hand, you want to take aggressive mitigation strategies. On the other, you don't want to create panic. It's very difficult, quite frankly, to arbitrate where that line is. And it is up to our public officials to a certain degree to give us the facts, but also to strike a responsible tone about where the threats are and not to be overreacting to this.
And in fairness to the officials, a lot of them, they're struggling themselves to really understand the facts because we don't know all the facts we'd like to know. But beyond that, the public officials have some obligation to take some action that might mitigate some of the effects on all of us. We saw the Fed make the 50 basis point cut last week. That didn't go over so well. We also talked with Larry Kudlow on Friday here at Bloomberg and asked him about possible fiscal response. And this is part of what he had to say.
We're in the camp, Jonathan, that wants timely and targeted micro measures, not large, sweeping, hundreds and hundreds of billions of dollars that don't affect incentives and don't affect growth in any permanent way.
So Lane, let's get as specific as we can because let me give you examples. I think of what he's talking about, the broad-based, that could be sort of a payroll tax cut, for example, across the board, everybody gets it. On the other hand, really give sick pay provisions to specifically people who are exposed to coronavirus. That would be more, I think, micro-targeted. If you were in the White House, how would you make that cut? Because you don't want to leave it too short. On the other hand, you don't want to go too far.
Yeah, I mean, this is going to be a difficult one because there's going to be strong political pressure to make the relief broader and broader. That's what happened with the Recovery Act back in 2008, 2009. That administration was, of course, more inclined to see broad-based relief than this one is, but still there's a lot of political pressure here. So I would focus on affected individuals, obviously. I'd think about affected industries. So, for example, is there some kind of targeted relief that will be necessary to boost travel and tourism, which has been disproportionately hurt by this? But, David, here's the reality. What we're seeing, for example, in some parts of the country is that the entire economy is impacted by this. So small businesses, restaurants, stores, retail, all of these things have downstream effects. So the reality is it is going to be hard to target this, I think, in a way that gets at the effects by region. And if you do try to target it, the challenge then becomes politically, as I said earlier, how do you stave off the argument that we actually need broader and more relief, particularly, I got to mention this, in an election year. Everybody in an election year is oversensitive on this.
Well, and particularly if there's any prospect at all of a recession, because now the markets, to some extent, are really pointing toward a possible recession. And we're seeing in Italy, as they quarantined 17 million people are talking about recession in Italy, maybe even in France. Can we avoid a recession here? And what would it take? People say we should do whatever it takes. What would it take, if there's anything we could do at the federal government level to avoid a recession?
Well, the challenge is the global headwinds were already strong coming into this year, and they've grown even stronger. So part of that is going to be out of our control. Here in the United States, I think we do have to give careful thought to what the impacts are going to be going forward if the coronavirus situation continues and drags on into the late spring. How is it affecting consumer demand, for example, which then will affect what businesses are doing in terms of hiring? Now, we haven't seen slack in the labor market yet. The last jobs report we had was very healthy last week. But as we look forward, we're going to start to see some of those effects come through. So the goal is going to be to stay ahead of the curve here. If we can start to stay ahead of the curve a little bit, I do think that will help us to avoid some of the broader impacts we've seen in Europe and certainly in Asia. But China's going to come out slow. We know that. A lot of Asia is going to come out slow. Now Europe's going to come out slow. So I think we're going to have some amount of inevitable slowdown as a result. Now, whether it pulls us into full-blown recession, we'll have to see. But obviously, there are some policy inputs here still that we can manipulate to try and avoid some of the worst. And also, Lonnie, as we slow down, the question is, can we come back fast? In SARS, as I recall, we came back pretty fast, didn't we? Yeah, but the impact of SARS was relatively limited because, frankly, the travel links, the interconnectedness was not as significant. So that is an interesting analog to study, but the SARS situation was far more contained regionally as well as in terms of the number of cases. And the impact here in the U.S. in SARS back in the early 2000s today is like night and day. Obviously, this coronavirus situation is impacting America a lot more than SARS did back in the early 2000s.
Okay, thank you so much, Lonnie. Always great to have you with us. That's Hoover Institution fellow Lonnie Chen. And right now we have some breaking news across the Bloomberg. Germany has confirmed its first death from the coronavirus. This is according to the news agency DPA. Germany now has confirmed its first death. Coming up, Saudi Arabia blows up the oil market. We talk with former U.S. Ambassador to Saudi Arabia, Robert Jordan. That's coming up next, and this is Bloomberg. This is Balance of Power. I'm David Weston. Saudi Arabia has effectively declared a price war with Russia over oil, and it is sending oil prices down more than 30% now at one point today. We welcome now former U.S. Ambassador to Saudi Arabia, Robert Jordan, who is now partner in charge of Baker & Bott's Middle East offices. He joins us today on the telephone. So, Mr. Ambassador, thank you so much for joining us. Give us a sense of...
Just a minor correction. I've retired from Baker & Bott's, but I'm a diplomat in residence at SMU in Dallas.
That'll teach me to read the notes that carefully. Thank you very much. But it's a great law firm, so I'm glad that you were there for the number of years you were. So give us a sense from your point of view, Mr. Ambassador, of the relationship between Saudi Arabia and Russia at the moment.
I think it's very tense right now, and it may have even taken on some personal dimensions. The new Saudi oil minister, Abdulaziz bin Salman, the son of the king, is a somewhat impetuous, short-tempered individual. And I think he and Alexander Novak, the Russian energy minister, may have had some personal clashes in Vienna in addition to their policy differences.
At the same time, we had some other news out of Saudi Arabia over the weekend, which was the Crown Prince Mohammed bin Salman reportedly made some arrests of some other princes that could be rivals for him. Are those two things related or unrelated in your judgment?
I think are probably related. The king, of course, is in somewhat precarious health. He's been filmed meeting with dignitaries, but one doesn't know how long he can go on. With this crisis in the oil markets, there certainly are restive members of the royal family who might have been considered a threat to Mohammed bin Salman. He has clearly employed thuggish methods in the past to curtail opposition, and this is just another example of it. Frankly, I don't think it's going to add much international confidence in the Saudi regime or their ability to manage this crisis.
At the same time, we've got oil now way down, $34, $36 a barrel, depending on WTI or Brent. What kind of pressure does that put on the fiscal status of Saudi Arabia, the budget, their ability to pay their bills?
Yeah, it puts enormous pressure on them. Their budget requires roughly $80 a barrel to break even. Their foreign currency reserves have dropped from somewhere around $750 billion to about $500 billion in 2 or 3 years, largely because of the drop in the price of oil, but also the very expensive war in Yemen. This puts enormous pressure on their ability to continue that war and to certainly to develop a further IPO for Aramco, as well as the key project of the Crown Prince, Vision 2030.
Okay, so Mr. Ambassador, the central focus is Russia and Riyadh in Saudi Arabia, but there's a third party getting hit here. That's the United States of America, particularly our oil producers, particularly shale producers. Back in 1986, I don't know if I read about this today, when he was vice president, George Herbert Walker Bush put some pressure on the Saudis saying, don't let the oil prices go too low because it may damage our domestic ability to produce oil. What kind of incentive is there for the Trump administration, who until now has said, we want low oil prices, to go to their friends, the Saudis, and say, you can't go too low?
I think you've got a serious risk here that American oil production capacity can be curtailed, wells shut in, disinvestment, and you have a number of oil companies right now with enormously high debt, some of which comes due in the next 2 years. So we may see some further bankruptcies, some further erosion of American production capacity in the long run if this continues.
So Baker & Botts, as I recall, does an awful lot of work down there in the oil patch. What kind of carnage could we see among the shale producers? Because they were pretty leveraged, as I recall, already.
Well, they're quite leveraged. One interesting factor here, I think, is that in 2014 to 2016, the previous oil minister, Ali Naimi, tried pretty much this same play of flooding the markets with oil in the hopes that they could destroy the American shale producers. It totally backfired, and Miami lost a job in 2016. This is a little different this time because of the high leverage of these companies and the destruction in the market. So it may be a bit more successful this time, and I think this is a risk that we've got to pay careful attention to.
Let me insert one other possible complicating factor, and that's Nord Stream 2, that oil pipeline up in the north. There are sanctions against people complying with trying to cooperate with building that thing. What kind of pressure is that putting on the Russians? To what extent are the Russians trying to really have at U.S. oil producers because of that pressure?
I think this is clearly a payback for the sanctions on Rosneft and Nord Stream 2, and the Saudis are now finding themselves embroiled in the same contest that the Russians have initiated. I think it also shows the ineffectiveness of OPEC in operating without the Russians on board.
Yeah, exactly. They called the bluff of the Russians. The Russians didn't go along with their deal. Coming back to Saudi Arabia, which you know so terribly well, how stable is the regime there in your judgment?
Well, it's probably stable in the sense that the Crown Prince has marginalized all of his likely opposition and has an atmosphere, at least among the young people in Saudi Arabia, who make up 70% of the kingdom, of being progressive, of creating sporting events and allowing women to drive and so forth. All of this, of course, comes as dispensations from him rather than really a recognition of human rights there. So there is an undercurrent, I think, that things are good right now, but if the budget goes down the tubes and they can no longer subsidize so much of their population, you may well see discontent spreading, and I think that's what he's anticipating.
Mr. Ambassador, from your judgment and your experience over in that region, what are the chances that what we're seeing here between Russia and Saudi Arabia is actually not a price war at all, but a negotiation, a very public, maybe nasty, but a negotiation? They're going to come back to the table and get a deal and shoot the price of oil right back up again.
Yeah, I think there is every chance of that. The Saudis may be counting on what I would call a clearance sale right now. They dropped the price. China buys up a lot of the cheap oil, and then they're ready to cut production back again. I think a lot of it depends on the reactions of the markets. Certainly the price of Aramco has now dropped below its IPO price. There are a lot of pressures on both the Russians and the Saudis right now.
Is it the markets that will bring them to the table, or can the United States really assert effective power? Because certainly President Trump has been quite a friend, I think it's fair to say, to the Saudi regime.
He's been a friend in a transactional sense, but I don't think he is necessarily an ally or a bosom buddy. I think they have common interests, and I think they're going to recognize right now there may be some divergence in the common interest. But the American shale producers provide a lot of jobs in the United States, and that could be at risk and something that would get President Trump's attention.
Okay, thank you so very much, Mr. Ambassador. That's Robert Jordan. He's former ambassador to Saudi Arabia. And now we want to check in on the markets, and for that we go to Taylor Riggs.
Hey, David, let me remind you of sort of what happened this morning. As you know, we'd opened up and we hit that 7% limit. And so markets were closed for 15 minutes. We reopened, and now finally does seem like we've come off of those lows by a relatively significant amount. The S&P 500 only off by less than 5%, and the NASDAQ, the tech sector, doing better than that, only off less than 4%. As we know, the next limit down to close the circuit breakers would be at 13%. We're nowhere near those. So certainly you're seeing a little bit of buying come in and step up here. You know where else we're seeing some buying is 30-year yields. We're still down by 32 basis points, but we're at 96 basis points on the 30-year. At one point, that was about 88 basis points. So again, you're starting to see a little bit of a reversal, but still nonetheless very much a risk-off day. Come and take a look at it here, though, because it's not just bond yields in the U.S., but certainly this is a global story. You're now looking at sort of global aggregate yields at all-time record lows here, well below 1%, including corporations and governments. So clearly a global story. Flip up the board, because a lot of the oil price action that we're seeing is some struggles as well with Tesla. With oil at 30, a lot of people are wondering if an EV vehicle even makes sense at those levels. So you're seeing Tesla and some of the other automakers decline on concerns of demand. Finally, I want to speak about demand and go over to the gold market. We had briefly touched $1,700, I should say. But now there are some reports that you were starting to see some selling within the bond market. Investors looking for cash any place they can. So while gold is a safe haven, trying to pull back a little bit on that, raise that cash perhaps for the next buying opportunity. David.
Thank you so much to Taylor Riggs. Coming up later today, I'll speak to Larry Summers, former U.S. Treasury Secretary, for his thoughts on the coronavirus and the impact on the U.S. economy. Live from New York, this is Bloomberg. This is Balance of Power. I'm David Weston. We have a quick recap right now on the latest coronavirus headlines. New York State is going to make its own hand sanitizer. Governor Andrew Cuomo says the state will produce 100,000 gallons per week. This is the safeguard against price gouging. Also, the executive director of the Port Authority of New York and New Jersey, Rick Cotton, has been diagnosed with the coronavirus after visiting airports and other facilities. He is in home quarantine, according to Governor Cuomo. Meanwhile, Germany has just reported its first death from the coronavirus. That's according to a report from DPA. Now to the latest on the markets. Joining us now is Andy Cinco of Bloomberg Markets Live. He joins us from Princeton. So Andy, welcome. Good to have you with us. So we've seen there's a lot of carnage out there in the markets today. What are people forecasting around the corner? Do we have analysts courageous enough to step up and say, we think this is what's coming?
David, that's a pretty tall order to make at this point. Markets are moving, awfully fast. And just to give you an idea of some of the things that our Markets Live bloggers have been talking about today, the front end rates are so low that it's essentially saying the Fed cuts rates to zero and then holds it there for another decade. In terms of inflation, we're talking about inflation below 1% for maybe 5 or 10 years out in the TIPS market. It's really hard in those kind of circumstances to make any kind of believable forecast. And you know what perhaps makes it all the more difficult is, as Taylor just told you, the stock market is rebounding here and the S&P is down about 4 or 5%. It's hard to get excited about bargains of 4 and 5%. It seemed like some investors were waiting for a much larger downturn to hop on. So this could just be another back and forth movement that we see in equities, and this might be far from being over. It's very difficult at this point to say, David, what might come next.
It's very difficult, but it doesn't stop me from asking you the question anyway. The question is capitulation. When does capitulation come? How do we know it? Looking at past capitulations, in retrospect, what would have told us that the market was ready to capitulate?
Yes, so really big, huge trading volume would be one of them on the downside. And then intraday, especially in equities, we'd look for a really big fall off early on like we had this morning, but perhaps even deeper. And then a turnaround in the afternoon, which would just take off like a rocket. And we've seen those V-shaped recoveries before, especially in the March 2009 period was just a classic one. But we've had other ones with the growth scares in 2006 and 2018. Haven't quite seen that here because we've had a V-shaped rebound, but it hasn't held, right? The next day we just turned around and fell. Other things to look for is like the ARMS index. ARMS is the ticker there. You're looking for a spike to 3, 4, or 5. And the last thing I'd point out is look for just everything to be sold that had been a winner. Utilities, REITs, consumer staples. I throw tech stocks in there, but I just don't think people are going to sell the Apples and the Googles of the world because they're just such a safe haven.
So, Andy, this is balance of power after all. Does the government have anything to do with it at this point? We saw the Fed cut by 50 basis points last week, and the market just sort of ate that up, spit it out, and said, we want some more, thank you very much. Didn't seem to slow things down very much. What on the fiscal side? Because there are reports that maybe even this afternoon or tomorrow we might hear from the White House saying, okay, we're going to have at least some targeted fiscal help. Is that something the markets are waiting for, or does it just have to burn itself out?
The markets would really enjoy a coordinated action. Remember, cast your mind back just a week ago, we were waiting for the G7 to do something. We got hints that there would be coordinated action. There was going to be a meeting of ministers. But the meeting ended and nothing happened. Then the Fed came out a couple hours later and cut rates, but nobody joined them.
Yeah, which had nothing to do with coordination, actually. After talking about coordination, the Fed just goes off on its own.
Well, they're the only one. They seem to be the only adults in the room, and they, frankly, are the ones with the least to offer. You know, if we're going to do tax cuts, if we're going to have extended leave pay and things like this, you know, that's something for the parliaments and the congresses around the world to do. That's not something for the Fed or any other central bank. So, still waiting for that shock and awe out of the G7, David. And your guess is as good as anyone else's as to when that might appear. No indication that any country is stepping up to do the heavy lifting here.
Yeah, we certainly don't see it so far. Thank you so much, Andy. Really good to have you with us. Andy Cinco of Bloomberg Markets Live. Coming up, Balance of Power is on Bloomberg Radio. In our second hour, we're going to have much more on the market sell-off, as well as the U.S. government's latest plans to deal with coronavirus, some of those fiscal things we were just talking about with Andy. In the meantime, Bloomberg Television, the European close is up next. European stocks are heading for their worst day since the day after the Brexit vote. Live from New York, this is Bloomberg.